All right, what's up, everyone? Weekly recap, and then tomorrow night, I'll be hitting you with the Sunday focus list. So we'll keep this one nice and brief. For those of you in the simpler options room, we're kicking some butt here so far this month. So we're off to a good start. We've closed a put credit spread on Google, a couple of call credit spreads on the Qs, on Amazon, on NDX, a put credit spread on DraftKings, and an Iron Condor on the SPX, with both of those trades being this week. We also opened put credit spreads on Lily and put credit spreads on Google. So we're off to a good start here, but it's just a numbers game. We kicked some serious butt there in January, and then in February we had a couple of losing trades: Chewy, Tesla, a handful of others, and now to start the month of March, we're off to a good start. So if you think of kind of the course of 100 to 200 trades, it's a probabilities game. Over the course of 100 trades, say you've got a 60% win rate. Scattered within those 100 trades is going to be a good 40 or so losses. So the numbers here kind of make sense. Killing it in January, a couple losing trades in February, back on track for March. So I think the major thing to keep in mind, and we'll get into this a little bit more tomorrow, but it's just kind of picking your stocks wisely right now. So you get a little bit of volatility over the last few weeks, but things certainly look better here. The S&P 500 is back above the 21, which is a positive. So we closed every day this week back above the 21. That's pretty key, because as long as we're trading under the 21, generally, you see a little bit more downside. So back above the 21, and we got the exhaustion of the bearish momentum. And now on Friday, you got a little bit of bullish momentum hitting the daily chart. So keep in mind, we have got, squeeze up here. So this coming Friday is going to be the first witching expiration of the year. If you don't know what that means, go on ahead and Google it. What potentially we're going to see this week is a total chop fest. And as we're sitting here in this big, wide daily squeeze, I think that does make a little bit of sense. So a trade that we took last week, that we placed, when did we place that Iron Condor? So we placed the Iron Condor on the 9th, and then we bought it back there on Friday. So what we did with the Iron Condor was, on the put side, we sold puts down here at 37.50. Can I change it, please? All right, so we sold puts at 37.50, and then we sold calls at 39.50. So we're doing a pretty wide Iron Condor here. And if you think about the strike selection, you get those Keltner channels up here. We are basically selling, calls and puts near the extremes here. So, as we get back above the 21, sure, the market could just kind of go berserk and continue to rally. I think with the, the witching expiration coming up next week, what's a little bit more likely, and keep in mind, anything could happen here. So if the market's at 4,000 next week, I'm not going to be shocked. I think you could see a little bit of chop. So on Thursday, it was breaking through our short strike here, but you did get a little bit of a gap down there on Friday. So we bought back the Iron Condor for 50% of max profit. So a little bit of a close one. But coming up here this week, I do like the idea of another one of those, depending on how much premium you can get. I think selling puts anywhere under the 21 and then selling the calls, as far above that all-time high as you can, could be a pretty nice trade. So the S&P 500 looks pretty solid. The Qs, though, all right, and this is why you got to be patient and a little bit careful with the Apples, the Facebooks, etc. The Qs, not quite out of the woods just yet. So one positive here, two positives. On the daily chart, we're seeing the exhaustion of the bearish momentum, with the red bars in the histogram flipping over to yellow. That's a positive because typically, that's our best chance at seeing the bottom and slowly seeing the market turning back, towards the upside. So that's a positive. And then on a weekly chart, this is a really important level at weekly 21. Like I've been saying, potentially, this is one of the best dip opportunities we're going to get in 2021 with a reversion to the weekly mean before we turn the corner and head back towards the highs. If it breaks under the 21, things could get pretty ugly. But if you just look at the overall trend here, that's one hell of a dip buy. There's another heck of an opportunity. So I think that's a key level of support. So you're holding up on the weekly 21. You've got some exhaustion on your daily chart, but the door for a little bit more downside is still wide open, is we're failing to close above the 21. So, think of everything we've been talking about lately, just that general concept, reversion to the mean. Let me clean this up for you. But, until we're closing above the 21 for a couple of days in a row, 2 to 3 average true range moves down, back to the 21, back down. You're not closing above the mean. The door to, the door of potential to roll right back over is certainly wide open. So keep an eye on that and be a little bit patient with the tech names. Once we get a couple solid closes, stringing together back above the 21, then I think we can approach it. But as far as a couple of setups, and we're going to get into this more here tomorrow night. So coming into this week, I still have my March expiration put credit spreads for Amazon, as well as the April expirations. So the 3,000 strikes on the spread where I sold the 3,000s and bought, I believe, the 29.50s, 29.90s. That's in the green here over the weekend. So we got a little bit of profit on that. The 31.50 strike put credit spread is a little bit underwater, but I've done a good job over the last handful of weeks, kind of selling the crap out of call credit spreads, covering a good chunk of the max potential loss on those put credit spreads. So if tech can get it going this week, Amazon should follow suit, and maybe we're going to get those profits after all. But we did our job here of hedging against those potential losses. So regardless of the outcome, we've protected ourselves. So I got some Amazon. I've had some Amazon. Eli Lilly, we got a put credit spread that expires Friday. I don't care what the stock is. If it looks like this, tight daily squeeze, trading above the 21, bullish momentum on the histogram. It's an orange dot squeeze, type form of compression, and you got the stack moving averages in green 10x bars. Picture perfect. So we got a put credit spread for this coming Friday's expiration, and we sold them short strikes at 205. So this is awesome, right? Beautiful daily squeeze. Inside the daily squeeze, you got a 4-hour squeeze getting ready to go. So I think that looks really good. We also been focusing on Google here. So this is awesome because in the options room, there's a couple of us that are trading Google right now, and we're all approaching it a little bit differently. Call debit spreads, in the money calls, put credit spreads. So it's kind of cool to see, the different ways you can skin the cat, so to say, on a good clean setup. So Google, unlike Amazon, Apple, Facebook, Microsoft, QQQ, looks awesome here. Stack moving averages, you got a couple green 10x bars. The bearish momentum on the histogram, I would like to see that disappear, but I do think Google looks really solid here. So what I've been working into are April monthly expiration put credit spreads, selling the short strikes here at 2,000. Now, maybe it dumps and fills the gap. If it does, so be it. But my mindset is, based on the structure and based on the setup, I'm confident come April 16th expiration, as we're approaching earnings, Google will be trading higher. If I'm confident of that outcome, I'm a lot more confident that come April 16th, as we're approaching earnings, we're not going to be trading under 2,000. So with that being said, that's a position I've been working into here. Excuse me. April 16th expiration. So we got 34 days on these jabronis. And we're just selling the 2,000 strikes and buying those 1990s. So those are a couple of things I'm focusing on. We're going to get into way more detail in tomorrow night's focus list video. But so far, we got a good couple of trades under our belt here for the month of March. Amazon shall be interesting this week, as should the rest of the month. So enjoy your day, be safe, and I'll talk to you tomorrow night with the weekly focus list video.